So, hey guys, welcome back to Accelerated Investor. I have an absolute treat for you today. Today, I'm interviewing my good friend, Justin Donald. Justin was recognized by Entrepreneur Magazine as the Warren Buffett of lifestyle investing. Justin is an absolute master at low risk cash flow investing, where he specifically specializes in kind of simplifying complex strategies, structuring deals, both real estate deals, business deals, and investments that allow him to invest for his lifestyle. Justin was able to retire prior to his 40th birthday because he focused on lifestyle investing, meaning he put his family before his work. And he made moves and made investments that supported the lifestyle that he wanted for him and his wife and their daughter. And his brand new book is coming out. I'm super excited to support it. It's called The Lifestyle Investor, The 10 Commandments for Cash Flow Investing for Passive Income and Financial Freedom. Today, I have the great pleasure to interview Justin Donald on the Accelerated Investor podcast. Here we go. Check it out.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So, hey, Justin, welcome back to Accelerated Investor. It's been about 10 months since your last episode with us. I'm super excited to have you. You got this new book coming out. How are you doing today, my friend? Thanks for joining me.
I'm doing great, Josh, and it's really nice to be back. It's just fun to connect again, as it always is. So thanks for having me.
Yeah, now you've got this new book. I specifically wanted my audience to learn about Justin's new book. You're absolutely going to love it. It dovetails with a lot of the things that I teach about investing for passive income. The book is called The Lifestyle Investor, The 10 Commandments of Cash Flow Investing for Passive Income and Financial Freedom. I've got an advanced copy. I'm going through it now. Justin, I absolutely love what I've read so far. This book is coming out any day. So Justin and I have been friends. Give you some context here to my audience. Justin and I actually met at a conference back in early 2019. At the cocktail table, we started just chit-chatting over drinks and find out we had a lot of things in common. I was a speaker on stage at that event. So it's like one of those relationships, you just kind of stumble into somebody at the cocktail table or in the hallway, in one of the men's room or wherever, and you make a connection with somebody and immediately start to feel like, hey, this is a guy I can trust, this is a guy I can do deals with. And we've done a number of deals together. Justin's referred me to a bunch of people. So I'm excited to have him back on the podcast. So Justin, let's start with this. What is your definition of a lifestyle investor?
Oh, it's a fun question. So, when I coined this term, people ask me this all the time. It's like, well, what is a lifestyle investor? And really the way that I looked at it was that I wanted to get to a point in my life, and I wanted to help other people get to the point in their life where they could put lifestyle first, that they have the ability to not work if they don't want to. They can work if they'd like to, but they're not a slave to a job. They're not, they don't have the golden handcuffs to the lifestyle that they live, and they're not chained to anything. So in other words, they have freedom of time, and they can choose how they want to spend it, and they can invest in a way that supports their lifestyle and doesn't take away their freedom.
Yeah, that's fantastic. So I met one of my neighbors, when I used to live down the street. I remember having a conversation. So your discussion there reminds me of him. And he said, I'm 50 years old. I've got a lot of money saved. I'm going to work another 5 years, but then I've got to find a way to bridge the gap between 55 and 59 and a half to unlock the golden handcuffs, right? So that's a guy that would need to know and want to learn what it's like to be a lifestyle investor instead of being in the Fortune 500 world, the corporate world, golden handcuffs, wait for retirement, and then all of a sudden have fun. What you're talking about in this book and what you're describing is really the opposite of investing for lifestyle first today so you could do the things you like to do. So Justin, describe the lifestyle for you. What is it like having the income and the passive income coming in to be able to live this lifestyle, to be able to do the things you want? What are some of the things that you and your family get to enjoy that maybe other people don't because they're chained, they're handcuffed?
Yeah, that's a fun question. I love the lifestyle that our family has built and created. We love to travel and we love experiences. I mean, probably the thing that I'm most excited to spend income on is experiences. And it's these experiences that we can remember as a family and with family friends. And so we do a lot of travel, and generally we do extended travel. So, this year the borders were kind of shut down. So we were supposed to be in Spain for a month, and then we were going to be in Portugal and kind of all over that area for another month. And so, those 2 months kind of got redirected for US travel, and we had a blast. We spent time on each of the coasts and in the mountains, and we spent a month of that time all over Colorado. So we still made it fun, but one of the big things for us is we want to do extended time, and having the freedom to not have to work and get to choose when you do and when you don't work, I think is so important. We want to have the freedom to really live life on our terms. And that can be on a daily basis where it's not have, my wife doesn't have a job. She can donate her time to charity. She can spend as much time as she wants with her friends. Same for me. I love meeting people. So I don't know that I'm ever going to just not work. I think that would be really kind of boring, but I just want to work on my terms and work when I want to work for as long as I want to work. And if I want to take a day off, I take a day off. If I want to take 2 months off, I take 2 months off. To me, that's lifestyle. And that's what I worked really hard for, was that autonomy and that total freedom to live life on my terms.
That's fantastic stuff. So Justin, when did this become a passion for you? Was there a life event? Were you stuck in a job that you didn't like? When did this become something where you said, look, I'm kind of sick and tired of this other life that I'm living. This isn't me. This isn't what I want. I need to start living on my own terms, and passive cash flow is the way to do it. When did this become your main source, your main goal, your passion to start that process? Of course, now you've achieved it and you're teaching other people to do it through your books and your trainings. But when did it really kind of hit home for you, kind of hit you in the brain, hit you in the heart, have the conversation with your wife and say, this is where I want to go. Like, I've got to start doing this in order to live my best life.
Yeah, it first started, Josh, where I had just made this dreams list. And it was 100 dreams that I had. And I had all these things that I wanted to accomplish. And one of my 100 dreams, and this is early on, this is like right before I'm 20, right in my early 20s, like in that time frame. And I was constantly updating my dreams list every year and adding to it. And one of my dreams on that dreams list was to retire by 40. And I didn't actually want to retire. I just wanted to know that I could retire. Right. And that way I spent time the way that I wanted to. So that was before I met my wife and, before we had our daughter. But that really was kind of like a driving, purpose for me, was that I wanted to figure out how to do that. And I wanted to live that. So as I met my wife and as we got married, I mean, she was fully on board and knew that this was my mission. And obviously it plays out really well from a family standpoint too. But sure, I just kept working towards that, each year. And so by the age of 37, I officially had more passive income than the lifestyle that I was living. And I was living a nice lifestyle at that time. And so that really, is kind of where it came from. Now, the next level, the next layer beyond just having this goal and figuring out the how to really happened in my early 20s. I believe I was 22 and I read I read Rich Dad, Poor Dad, but I also read Cash Flow Quadrant by Robert Kiyosaki. And it was that second book, Cash Flow Quadrant, that really opened my eyes to this world of entrepreneurship and moreover, investing. That there was a such thing as a professional investor, and you could actually invest in companies, and that's how you could derive your income. And that thought had never really crossed my mind before. When I thought about retiring and earning, great income, it was based on like accumulation, right? But that opened my eyes to having assets that produced cash flow, and that really was the starting point, at least from a trajectory standpoint on the moves that I made.
Yeah, that's fantastic stuff. The Cash Flow Quadrant is a huge book, had a huge impact on so many people. Many people, though, don't do anything with it. So kudos to you, my friend, for taking that seriously and doing it at a young age and actually making moves. Now, Entrepreneur Magazine called you the Warren Buffett of lifestyle investing. So you invest for lifestyle. Help me understand how someone can start investing for lifestyle now when they haven't, like you said, accumulated all the cash that they need. Many people think, I'm going to work, accumulate the cash, shove the cash into investments. That's going to spin off passive returns, and then I can have my lifestyle. You did the opposite. You thought of, how can I get into deals, investments, businesses with and without your own cash, so you could start earning passive income. So if somebody wanted to start along this journey and they have the same mindset that you had, which is accumulate first, how do they break that mindset and begin investing if they don't have all the cash they need?
Well, you said the key word. It's a mindset transition, right? So when you look at the conventional way to invest, it is this nest egg approach, and hopefully you can draw off enough cash just in interest to be able to live, but the odds are that you can't. We really don't know what that number is going to be. So it's just, we're throwing a number out there and hoping that that's enough. There's a lot of hope, and that we hope that the stock market is in a good place at the time of retirement. And the list goes on and on about, the hope that's involved in that strategy. And so the reality is people are going to dip into that principle, and then that principle is going to decrease, and then it's eventually going to be gone. And so that, to me, just, it was a broken system. It was a broken strategy. So I figured that it would make more sense to have assets that just produce income, and that those assets would have some sort of value and likely would appreciate. And then also, during the last decade, we've had a lot of, or even more than, 15 years, we've had a lot of QE and stimulus and just money being pumped into the system. And so I figured another way to really make sure that I'm not losing purchasing power is to have assets that are going to inflate at the rate at which our money is inflating. So it became a really good 1-2 punch. So first and foremost, it cash flows so I can live my lifestyle. Secondly, I'm getting the appreciation, whether it be from improving the property or just from natural, supply of money, getting greater. But to answer your specific question, how do people start? Where do they start? I think it starts with a mindset. It starts with doing things differently. It starts with peer group and who you're spending time with and how they're thinking and adopting their thoughts and really choosing the different path. And then it just is putting one foot in front of the other and making an investment, running that investment by other smart investors that can make sure that it's a good investment, that it's a good operator, that the risk is reasonable to low or non-existent. And, also kind of built in is this intrinsic value so that it's never going to go to zero. So if you did lose, it's only a small percentage loss, but the upside is pretty good. And the risk of losing is not even that great anyway.
Right. I love it. Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com joshcantwell.com/podcast. That's joshcantwellcoaching.com/podcast. Now the book has 10 commandments, right? You guys all want to check this out. You can go, I'm going to plug it now, justindonald.com. You can get your pre-advanced order of the book right before it comes out. And then, of course, if you catch this podcast after it's released, you can get it right from the website, justindonald.com. The book is, again, called The Lifestyle Investor, The 10 Commandments of Cash Flow. So let's jump into some of these commandments, Justin. There's the first 5 or 6 or so that I've read in the book, right? The lifestyle first. We've kind of touched base on that. What did you think when you were thinking about the first chapter, writing the first chapter, you lived the first chapter? If I'm a reader and I'm thinking lifestyle first, where does that begin? Is it start with dreaming? Does it start with travel? Does it start with what I want my life to look like? Where does that first chapter take us?
Yeah, I talk about a freedom vision in this first chapter, and really it's getting clarity because the way that I live my life isn't necessarily the way that you want to live yours or the way that any of the listeners want to live theirs. Now, there might be a lot of similarities. There are probably a lot of people that say, yeah, I want exactly that, but there are different nuances to how they want it. So I think it's important to get clear on what it is that you really want. What does that look like? What time frame are you working, not working? Are you able to spend time with family? So for me, I used to schedule work and then family and everything else. And that really made it so my family got leftovers. So I wanted to get to a point where I could pick my schedule of choosing family first, and then I could do work around that and I could do everything else. And so to me, that was just a better strategy. You know, if someone doesn't have a family yet, they may not value that. However, at some point, they probably will once they have a family. And so I think people have different needs and they just want to explore what makes most sense to them right now in this season of their life. And then it changes. So we have to constantly reevaluate it. And then I also think that we get to a point where we can upgrade our life. And that's really fun too. So wherever you're living right now, whatever that lifestyle looks like, I think that's great. What is it? How exciting is it to be able to move to the next higher lifestyle that you desire to have and to do it without slaving for a job and for a boss that you may not like? You know, few people actually are passionate about what they do. And if you gave them a chance to have, just cash out, they'd probably do it. So if you're not loving what you do, you might as well figure out a way to get out and spend your time in a way that serves you better.
Absolutely. I was once in a mastermind group with some guys and maybe even a guy that and we were getting to know each other. And you're like, well, everybody write down kind of like what your goals are, what your big vision is for your life, and share it with somebody that you don't know. And I was much younger at the time and I didn't have as big of a vision for my own life. And he said to me, he's like, I want to have $250,000 per month of net free passive income. And I thought to myself, like, oh, dude, like I wasn't thinking nearly that big. And he just said it straight face as could be, wasn't like joking around at all. And you could tell like he had a vision for what that income could do for himself and what that freedom vision, what that lifestyle could look like. So he was fighting for that every day. He obviously was much more seasoned, a little bit more mature than I was at that time. So it starts with lifestyle, starts with this kind of freedom vision, starts with understanding you don't have to put work first before family. Chapter number 2, Justin, you talk about reduce the risk. Tell us what was on your mind when you were writing this chapter about some of maybe your own investments that you've evaluated where you're really, it's number 2 on the commandment list. So this must be a very big deal, reducing the risk.
Yeah, I really don't want to enter into investments where I have a high likelihood or even a decent likelihood of losing money. So one of my biggest things, a lot of people get lured into investments by the appeal of a high return. Well, what's more important than a high return is the likelihood that you don't lose money or that you arrange it and structure it in a way that you're protected. So Warren Buffett talks about this, right? This is his number 1 rule of investing. And so I'm a huge Warren Buffett fan. And so I wanted to make sure that I was doing justice to that exact point because that has been a huge success in my life is the ratio of successful investments to unsuccessful investments. And so I think any investor is going to lose money at some point in time. And as long as you can learn the lessons from it, that's totally fine. And as long as you make more than you lose, then that's good too. But the problem with losing money, especially at the beginning, is that it takes twice as much work to be able to earn it back, and you forever lost that you have a lost opportunity cost. So you forever lost what that money could have earned you had you not lost it. So I just think that is so important.
So why do you think so many people just pursue return? I mean, I get it. It's I just want more. They do, but even with my own investments, we syndicate a lot of apartments. You guys done tons of mobile home parks. I'm surprised sometimes when people don't ask me more about the risks. When you invested in our deal, it was the first thing you went to was risk, not necessarily return. It was about the exposure of equity or the exposure of your investment, more so than, well, how much am I going to get back? That wasn't really but so many people are lured in. I think maybe it's greed, maybe it's just or maybe education. They don't know. If they get wiped out or investment even goes down by 50%, you've got to now make 100% return to get that money back. And that's just to get back to square one.
Right. Yeah. It's unbelievable the negative drag that has on the net worth of a portfolio or of what a person has. And so to me, like I see deals all the time that I wouldn't touch. But after I negotiate a bunch of terms, I'm like, oh, these are really good now. They've accepted the terms that really make this a safe deal. In some of the investments that you do, some of the risk, happens to be just with the bridge financing, right? Like it's a shorter term loan. And so, one of the questions I asked you is regarding that, as opposed to maybe going with a straight agency type of loan on a longer term. And so once you can evaluate and say, oh, well, the risk to reward actually is pretty good. The risk profile could be dangerous if, too much leverage exists. But if there's not too much leverage, then that's all right. Now, on a one-off deal, in that instance, there's not a whole lot I can do to change the risk profile of your deal. That's something that you've done a great job on over the years. However, I get deals all the time where I can make an adjustment. Part of what I do is I negotiate terms that are better for myself and for a group of investors that I come in with, and I can protect it with unique mechanics. I mean, a put option where I can get my money back at any time if I want to, which is nice. I can collateralize a loan or an investment. So if something goes wrong, I have 2 or 3 or 4 times the value of that loan that is, owed to me to cover that debt or to cover that investment. And there are tons of different mechanics and strategies and structures that you can use so that it de-risks a deal. And one of the future commandments that we're going to talk about here in a little bit, and we'll get into this in more detail, but it's to get the principal out quickly, right? That's another way to de-risk the deal. If you can pull principal out fast, well, then it's all upside. And there are many other ways to do it, but that's just a handful. I outline a ton in the book.
Yeah, fantastic. That's chapter number 2. Chapter number 3, Justin, is about invisible deals, like being a cash flow investor, being a passive investor. One of the commandments is these kind of invisible or off-market deals. I'm baffled, as being a more seasoned investor myself, how many of the best deals never make it to market. They never make it to the public. You address that in chapter number 3. What's your definition of an invisible deal, and how do you find them?
So there are a lot of different types of invisible deals. So you mentioned off market. That's for sure an invisible deal. And most people don't even know that happens until the transaction's done. But you can have invisible deals in other ways too, where you have just a very high price point to get in. So, most people aren't going to know about it. There are, exclusivity type of deals, or there are kind of membership groups. I've got all kinds of access to deals just from relationships I built over the last 20 years that are never going to hit mainstream. And people aren't going to know that it's done until it's done. And some of these are high profile deals. These are deals that you will see on the news. And it's like, whoa, I had no clue that that's happening. You can buy companies. I buy companies all the time, either pieces of companies or the full company, just based on negotiating a deal, a private deal with someone for a business that's not even for sale. You've got other invisible deals that exist in emerging markets that most people aren't looking at, or even like paying attention to trends or what's happening in technology. There's so many disruptive industries or disruptive technologies in certain industries that are getting more and more prevalent that people don't see. And then often insiders in industries only see things a certain way, Josh. And so they only have a lens to look at it the way that they've ever looked at it. And they're just going to totally miss other opportunities to structure deals or to find deals or to spin things off or to, create some unique mechanics maybe on an operating company that's sitting there that no one's ever talked to the owner about doing it this way, and they're open to it. I mean, there's just so many ways of structuring, finding, and executing these invisible deals.
In my newest real estate investing book, The Flip System, you'll learn the proven secrets and strategies that I've used to be a successful real estate investor. You'll also hear the story of my journey from quitting my job to doing over 2,000 units of apartments. The Flip System is now available for a limited time, and you can grab your free copy at getflipsystem.com/podcast. You'll learn the same proven principles and secrets and investing strategies that I used to quit my job and pursue a life of financial freedom. In this book, I'm sharing exactly how I was able to personally close over 750 profitable real estate deals, make over 400 private lender loans, raise over $30 million, and acquire over 2,000 units of cash flowing apartments. Get my newest book now for free at getflipsystem.com/podcast. That's getflipsystem.com/podcast. Justin, and you mentioned earlier a couple minutes ago about peer group, and I don't want that to go unnoticed because a lot of invisible deals will happen based on, again, who you're connected to, who's your peer group, who you're associating with. Your peer group has obviously morphed, changed, grown over the last 20 years. But again, define peer group and help people understand how they can constantly be kind of leveling up their peer group to get access to some of these invisible deals.
Yeah, that's a fantastic and thought-provoking question, because I hope everyone is leveling up. To me, your peer group is really a collection of the people you spend the most time with. It could be 5 people, it could be 10 people, but it's really having some intentionality behind where you're spending time, not just being in a reactionary mode where you react to everything that's happening in life, but to take time and to proactively decide who you're going to spend time with and the effort you're going to make. My wife and I sit down once a year and we plan out our year, and we plan out who are the most important people in her world, who are the most important people in our world, who are the most important couples that we want to do life with together, and really scheduling that time. But one of the things on my list are who are my top mentors? Who do I want to be intentional about spending time with and meeting and getting in my world? A lot of my mentors were never even in my circle. Like I willed it into existence because I knew that I wanted to do that. And sometimes it was joining mastermind groups, which is fun. I started my own mastermind, the Lifestyle Investor Mastermind, so that other people have a resource, a vehicle to be able to get this type of access and get this type of higher level relationships and thinking. And it's just fantastic. And there are tons of them out there. I'm part of a bunch of groups, and it's just the stimulation in thinking and the quality connection that you get is life-changing.
Yeah, and to connect the dots, those people, as your group levels up, are going to have access to invisible deals, off-market deals, companies, relationships, businesses that are for sale that you'd never know because it's happening in sort of an insider way. Fantastic stuff. Justin, you mentioned number 4, getting your principal returned quickly earlier. Why don't you just touch base on that again? What's your favorite kind of deal to do where you put money in and get it back? What's your definition of getting it returned quickly? Is that 6 months? Is it 2 years? What does that mean to you? And then again, why is that so important to having, the passive income and having the lifestyle type of way? Because, the ability to kind of re-leverage that money again and again and again. Talk about that for a sec.
Yeah, getting my money out quickly really is the key to reducing risk in an investment. The sooner I can get everything off the table, then it's all upside from there. And more important than that is I can reinvest into something else and get another investment return on those same dollars. And over time, you can just continue to do that and recycle that principal. You don't ever spend that principal. You just keep pulling it out, recycling it, and putting it into a new deal. Now, there are a lot of different ones I love. I mean, real estate is fantastic for this. I've done this with hard money lending. I mean, generally that is like 6 to 12 months. With real estate, it's generally 1 to 2 years. I've done it with other type of debt type of instruments. And that one is, it could be a 1-year note, a 2-year note. I mean, generally I like to have my principal back within 2 years, worst case 3 years. And if I can get it in a year, that really to me is golden. So, part of what I love about your deals and what you guys do is you do a great job of refinancing your assets and refining those proceeds back to your investors so they get their initial principal out within 1 year to 2 years, which I love, usually 1 year to 1.5 years. And so I've got equity in an investment with your company. I've got all my money out, so my equity is all upside. And then I can take that same money, I can invest in another one of your deals. I can invest into another note. Now, here's one of the unique things, and I get to this later in the book. Because I love income amplifiers, and that is chapter 6. And so one of the things I like to do with debt plays and with all kinds of different investments, but specifically debt plays, I like to negotiate an equity kicker. So like the investments with you or in other type of real estate syndications or even in real estate funds, you can invest in a way that you get your principal back quickly, but you still maintain equity. Well, you can do that in a traditional debt note with some, strategic negotiating. So I can get that same equity in a debt play if someone needs that, money badly enough, or if we can negotiate the terms in a way that they feel good about doing it. And so I get equity kickers all the time, which means I get all my cash out of the deal and I've got free equity, and all I provided was a high interest loan. So, that's it's a way of getting the real estate-esque play in a debt play.
Love it. Last one that we have time to cover. I mean, we'd love to cover all 10. Maybe we'll have you back for a second podcast, but regardless, my group, you've got to go get this book, The Lifestyle Investor, The 10 Commandments. It's going to be available at justindonald.com. We've got time for kind of one more, which is number 5, which is, again, you like to see deals. And again, guys, this is all about structuring deals that allow you to have the lifestyle that Justin's talking about, right? So these are specific actionable strategies that allow you to make investments with your money. It could even be with somebody else's money or a group of investors that allows you to spin off income to have the lifestyle that you want. But the 5th chapter, Justin, is all about investments that create cash and cash flow immediately. Okay. Versus investments, sometimes like development deals or long range deals, like long range startups where they don't produce cash flow for a long time. Why is getting cash and cash flow immediately part of being a great lifestyle investor?
Well, when you get cash right away, it gives you more options. So I can either use that income, and technically it's a different type of income, right? So it's taxed differently than your earned income. That's one point. And you can eventually get into a passive income category for IRS tax code where you pay the least amount of taxes that exist, right? So, but not to go down that rabbit hole for this example, but I do think that you have optionality. So you earn some cash flow. That cash flow you can live your lifestyle on. If you already have your lifestyle covered, then you can take that cash flow and reinvest it into something else where you're creating more cash flow. or creating more opportunities. So for me, I don't like to invest in risky things. And if I'm ever going to invest in something risky, I want it to come from the cash flow of an asset that I can hold that maintains its value, ideally continues to appreciate, and every single month pumps off more cash flow for me, at a worst case every quarter, so somewhere in there having some sort of regular frequency with which I'm earning cash flow. And I want to build that cash flow at first to cover my bare minimum expenses just to survive. And then second, my current lifestyle. And then third, I want to build it to the lifestyle that I truly desire for myself and my family.
Love it. Guys, again, JustinDonald.com. Check out the book. Justin, just want to ask you one final question. After all the things you've learned, invested in, a lot of entrepreneurial tips here, a lot of leadership tips here, lifestyle investing tips. If you were going to go back and give yourself one piece of advice, maybe to someone in their late teens or early 20s. And again, this can apply to any one of our audience members who's just kind of looking at just kind of getting going. What's maybe the one piece of advice that sticks out? Something that you wish you knew back then? You've obviously done an amazing job of executing on your goals, creating your freedom vision, and then working hard to get there. But what's the one piece of advice that really sticks out? Maybe almost like your, what do they call it? Your magnus opus, your main theory about the book and about your lifestyle that you'd like to pass back to yourself or to our audience.
Yeah, I just wish I would have started sooner. I had this fear that I didn't have the money and that I couldn't get started because I didn't have enough saved up or I didn't make enough. And really, that was just all limiting beliefs, because when you have a good enough deal, the money shows up. There are always investors ready to invest in a good deal. But I didn't look at it that way. I was waiting until I had the cash. And once I had the cash, I started making moves. Knowing what I know today, I should have just made moves and raised the cash. And then I would have gotten, I would have had the success sooner, but I also would have had the cash for myself to invest on my own sooner. So that really is it. And to parlay that, it's really to invest in yourself and your education first. So part of being able to take action sooner is to have the knowledge to be able to do it. So it's kind of, to me, like a 1-2 punch. It's making sure you're investing in yourself and you're learning, but then you're taking action on that knowledge.
That's fantastic stuff. Justin, listen, it's been an awesome time. I know we talk a lot offline, texting and emailing, but to have you on the show today, it's an absolute pleasure. Thank you so much for joining me on Accelerated Investor.
Josh, thanks for having me. This is an absolute blast, and I'll look forward to talking with you again soon. Hey guys, thanks so much for having me on the show today. I'm really excited about our time together. If you would like to learn more, you can check out my book at JustinDonald.com. In fact, I'm going to actually give it to you for free. All you have to do is pay for the shipping. And for anyone that's interested in learning more, there's an online course that you can check out as well.
Well, guys, there you have it. I hope you enjoyed that interview with Justin Donald, my good friend and an amazing lifestyle investor. Check out his book. You can get it absolutely free at JustinDonald.com. He's actually going to let you get the book for free. Just pay the shipping and handling. He's going to ship it out to you. This is a book that I absolutely love and endorse. I've been very fortunate to read the advanced copy. And in this interview, you're able to hear the first 5 commandments. I hope you loved it. Hope you enjoyed it. Don't forget to leave us a rating and a review of this interview. It would really mean a lot to me and to Justin if you would leave us some comments, some questions, share this all over social media if you really liked it. And don't forget to grab a copy of Justin's free book, The Lifestyle Investor. Go get that at JustinDonald.com. Thank you for joining me again on Accelerated Investor. We'll talk to you soon. Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're gonna do then is every week we're gonna pick our favorite rating and review, and we're gonna send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.